Well, let's go across to Adam anyway. We're a couple of minutes out from the start time, but I think we should welcome him into the event. I can see him in the list, so what I'm going to do is to make him a panelist, and when the
Can you hear me? Hello.
microphone comes off, yes, Adam, hello, it's Simon here.
Hi. Oh, hi Simon, how are you doing?
I'm very well, very well. Thank you for your contribution. You're right, 4X Army, and there are various other sites, of course, that they all do review these different
Yeah,
things.
I think
But
they take it. It's a really good question. It's a universal question, and it's tricky because some people have bad experiences where other people don't, and so
mhm,
the reviews really aim to kind of work off, I guess, in terms of trying to determine whether the brokers are legit or not. First of all, so it's a very good question, and it can be a bit tricky out there. I think many brokers today are in better shape than they were, say, 5, 6 years ago, and and so really at this point, most of them are pretty much the same in many cases.
that's right. But of course, there is this new guidelines coming out from the FCA, which are changing some of the parameters that brokers are allowing to smaller traders to leverage up their trades. So that might be making some changes in the coming months with spread betting companies in particular.
Yes, I think that the markets are attracting more and more people, which is a good thing. But also because everyone is relatively new to it, to some degrees, the safety checks have to be in place, and one of those is leverage margin requirements as well as just general education. So it's definitely evolving
Mm.
in the same way that 50 years ago, very few people had a computer, or 30 years ago, very few people had a computer. Now everyone does have a computer, even on their phones. Most people are now looking at the market, just like they do at properties, as a way to earn an additional income.
Um, Adam, welcome to the show. It's the first time you've spoken on the Round the Clock Trader event, and this is good to have you here. We are well, a multi-speaker event, and we feature presentations by 12 different speakers throughout the day, so it's good to have you taking part. You are currently a mentor for a company called TradeWithPrecision.com, which is a sort of a global community of traders and mentors based around the world, conducting a lot of mentoring through webinars. So you're very comfortable with obviously this sort of format. But you weren't always a trader. You had your own business and things like that. Can you just tell
I
people a
did.
little bit
I did.
about your story?
So I mean, I'm 42 now. It's not a big deal except for the speed at which time goes by. But I was actually, after I watched Jurassic Park, I was enamored with the film industry, and I got into computer animation in its early days. So I used to work for a company called, well, it's now Autodesk, but I used to work for a company called Silicon Graphics and another company called Alias Wavefront, and I was very much involved in the animation industry. Traveled around the world, which was fantastic, and in fact trained a lot of people who subsequently now work in the big companies around the world. And then I had a production company in South Africa, in Johannesburg, and ultimately sold my shares in that in about 2008. And at the time, I wasn't aware, because my financial education at the time was minimal. I could sense that properties were overpriced, and I wasn't, and I could sense that the budgets were getting cut. And working with a lot of advertising agencies, I was aware that there was something going on, but not really aware, kind of strictly speaking, of what was, what the issue was. And I think at that time I decided to sell my shares, and then the question that I asked myself was, how would I used to stress about making sure that I had my staff salaries paid, and your taxes and VAT and everything that had to be sorted, and rent, and of course just trying to keep the business afloat. And I decided that whatever I did next, I didn't really want to employ people. And then I also thought, well, I don't really want to be employed either. So I kind of did some research and thought about things that historically are known for making money, but that would tick those boxes, and ultimately landed on property and trading. And at the time, when I Googled it, Forex kept coming up in Google searches. And so that was really how I started to investigate the idea of doing a program. So I started looking at a few different programs. Do you want to hand over to me? Shall I share my screen?
Please, let's do that now. I will send you the invite to make you the presenter. Yeah, it's a good story, and I'm sure there's a lot of people here share that a similar story to that. It just leads us into these positions, and for all these reasons that you're mentioning, not wanting to be employed or to employ people, the financial trading offers a great opportunity to do that. So. This is great. I can see your screen. Learn a six-step trading
Fantastic.
strategy. If I could just ask
So
before I back out of the webinar, people just to confirm using the chat box that they can hear Adam and they can see the title slide. That would be great. That's great, Guy. Thank you very much. Okay, Carol, great.
okay.
So Adam, I'll hand over to you. It's just about 4 minutes past
Thank
the
you,
hour.
Simon.
The next speaker won't start for until the next hour, so we've got about 56 minutes. So over to you.
Uh, yeah, that's fine. Thank you. I'll monitor the time from my phone. And Simon, thank you for the invitation. By the way, it's great for you to have created this. I guess because when I was starting out, this would have been the best place for me to go to investigate and sniff around and do a whole lot of things. So I just want to say thank you. It's a pleasure to be involved from the other side this time around, and I just want to say thanks very much for setting it up. I think it's a much needed contribution to the industry, so thank you.
Thank you for that, Adam.
So, all right, so I was just going to say that I arrived in London, and this was around 2009, and started sniffing around looking for programs to do. And I ended up doing a couple of programs, paid a lot of money, did quite a bit of education. I think there was some value in the trading programs I was doing. And I read everything I could get my hands on. I read, Trading in the Zone, The Disciplined Trader, Steve Nissen's Candlesticks. I did, oh man, I just did everything I could get my hands on. So anything that anyone else is talking about, I sort of got my hands on doing that. Larry Williams, Niall Fuller, Al Brooks, price action, everything. So, and I made all the same mistakes. I got greedy, excited, up at 5 in the morning trying to trade the market and be done by 8, and just all the different sales pitches. Basically, I don't think there was a single sales pitch that I didn't hear in those first few years, and I was a little bit sort of all over the place. But I was grasping stuff in principle. The issue was that there's always someone offering another strategy or another indicator or another gadget, and it's exciting, but it's also very flashy and doesn't really it didn't really feel like I was progressing. Anyway, so I probably did that for a couple of years, and I was also trying to pick the time frames I was trying to trade. I was a little bit all over the place, and when I was doing the program, there was the presenter at one point recommended that I look at. He said, "Listen, if you aren't subscribing to Trade with Precision's weekly newsletter, you should." It was like 2 6-minute videos where Nick McDonald, who's the founder, was doing market analysis for the Intercontinental Exchange, which is a massive exchange in the US. And basically, his stuff was just so good. He was always right. Every week he would say, "This is what I'm expecting the market to do, the dollar, this is what the euro is going to do," and he was just always right. And eventually, I had already spent so much on education. I was loath to do it again, but I was actually saving and making money. So eventually, I just committed and did it. And I think that was the best decision I ever made, predominantly because about 80% of the general knowledge that was in the program that I did with Trade with Precision was already roughly known to me. There was 20% which was details, which I think are crucial, that I wasn't aware of, but it was mainly also about how it came together. It was really about pulling it all together and making it. I wasn't applying what I was learning properly. So anyway, so that was really just the progress. I wanted to tell you a little bit about myself. So obviously we've got the risk warning and disclaimer. Just to Trade with Precision is not a signal provider. Now I wish I had sort of listened to every speaker who was presenting today, because I think there's some really talented individuals, and I think there's a lot of knowledge to be gained. I think for beginner traders, it's very confusing potentially, because it's kind of everybody's trying to sell their wares and everything, and I'm not going to do that. I'm very proud to be part of the team. Although I trade full-time, I'm very proud to be part of the team at Trade with Precision. So what I'm trying to say here is that I want you to be able to be, make your own decisions here. We're all adults, and in my personal opinion, this is the best trading system I've ever seen, but that's just the same thing that everybody else says. So I want you to judge for yourself. So first of all, sorry. Welcome to the Round the Clock Trader event. It is great to be here. Who is going to benefit the most from this session? Effectively, people who have been trading for a while but are just not getting the consistency that they're wanting. So I'm just having a look at some of the comments here, just making sure that the questions and everything are being answered. It all looks good to me. And actually, give me one more second here. Yep, just making sure it's all good. So yeah, if we have questions, by the way, please feel free to ask them as we go through into this one.
Adam, are you seeing the questions?
It looks as though I'm really just seeing my conversation with you at the moment. Right. If anyone has typed a question in, I'm not seeing any.
Let me give you. I think I need to give you more rights as an organizer.
Okay, hold on a second. No, I know what it is. No, send chat to you. Yeah, okay. What you can do from your side, thanks.
I'm going to make you the organizer, which now should give you access to the questions box. You'll see a whole lot of whys in there from people confirming that they can see.
Thank you. Okay. All right. So keeping an eye on the time. Okay. So just to kind of sort of keep rolling forwards on this. This is really where I have found that so although I trade full time, and what does that mean? It means I work from home. I'm in Wimbledon at the moment. It's a beautiful day, and I probably collectively spend about no more than an hour or two physically in front of the charts. I mean, I do sometimes sit in front of the charts and just play around, or I might do about 6 hours a week for Trade with Precision. And that's really because I think that if I wasn't doing that, I would just go crazy. I would literally I would just pester the local coffee house because I would have nobody to talk to. So it really does benefit it. Plus, my colleagues are incredibly good traders. They're incredibly good at technical analysis, and so it always benefits me to work with really good traders. And if you had access to that, wouldn't you do the same thing? So really, that's kind of what I do, but it doesn't take more. I'm going to show you some of the trades I took last week, and collectively, that was probably no more than an hour's worth of management of those trades. So for me, it was really just about getting the results. And so when I saw Nick a few years ago, he said, look, do you want to join the team? And I had the time, so I did. And so we're going to talk a little bit about a trend flow strategy, which is yours to... sorry, I'm looking at the questions here. Yeah, you know what? Even I'm not sure I can get Wimbledon tickets this year, but that would be fantastic. I saw the semi-finals about 2 years ago. It was amazing, and it was a perfect day for it as well. So here's what we're going to cover today. We're going to talk about the trend flow strategy, which is the one that I use. I've got a couple of strategies, which are TWP, Trade with Precision strategies, but the one is just so easy for me to do. It's very easy. It's the ones that I traded last week. It's easy to spot. And basically, they're tradable in any liquid market in any time frame. So you could trade stocks, forex, indices, commodities from 1-minute time frames to monthly charts if you so wish. Now, I'm very sensitive to the idea of trading is not a secretive society. Trading is not a conspiracy. It's really not. It's technical and it's logical and it's sensible. Okay, we might get a technical incident such as a flash crash or the Swiss CD picking, and that's possible. Of course, that's possible, and that's going to happen. It's inevitable at certain points. But aside from that, for the most part, technical analysis always delivers. And so I'm loath of people who try to bully you into buying their products or bullying you into doing certain things, because that's actually makes trading not as pleasant as it really is. It's very much a learnable skill, much like a language. But here's where this is what we have to understand. The way that Trade with Precision works is common sense. We trade only trending markets. The reason we trade only trending markets is because, first of all, the direction in which the market is going is very clear. Secondly, the odds of us hitting our 1-to-1 or 2-to-1 or 3-to-1 or even greater targets is much better than it would be under any other market conditions. And third, it's a time saver. We can let go of charts that are not trending, just let them go and just move on to charts that are trending. So we're going to go through the markets depending on time, because I have promised Simon I will be finished exactly on a minute. Let's call it a minute before the end of the hour so that I can hand back over. And so basically we need to be trading liquid markets. Liquid markets meaning any markets, and there's so many out there. There are thousands out there that we could trade. Basically that just means that the costs for us to place the trades are going to be very cost effective. And and also that we're not going to get gaps out. We're not introducing risk into our trades. It's very practical. We want to trade stocks, forex, indices, and commodities. Why? Because sometimes the trends are incredibly strong on commodities and stocks, and they're not trending on currencies. They're ranging on currencies, and it's relatively speaking, it's easy money. And that's a very important aspect. Is a lot of people overcomplicate it. There's one slide I want to cover because I can associate it pretty much with anyone who's almost doomed to failure. And that sounds very negative, but it's kind of the same as when we keep picking bad relationships with the same type of people we shouldn't be doing that with. People pick bad charts to trade or whatever. They pick bad trading ideas. But the point is we could trade from 1 minute to monthly charts. Personally, I'm normally trading 1 hour, 2 hour, 4 hour, 8 hour, and daily. Nothing more than that. And all the trades I'm going to show you later, I took off the daily. So Who's Trade with Precision was started by Nick McDonald. In my opinion, he's the most natural trader I've ever met, and there is zero bullshit with this guy. And I'm sorry, but there's so much of that out there. It's everywhere. And we live in London, so it comes with the territory, but there's just nothing with Nick. Nick is a shy kind of reserved person, but wow, he knows his stuff when it comes to technical analysis. And so these are the clients. We've got the Intercontinental Exchange, the Chicago Mercantile Group. We're providing, well, I say we, like I said, I'm very proud to be part of the group that is providing market technical analysis to the top institutions in the world that goes out to their clients. I mean, the stuff for ICE was going out to 30,000 people every week. And you can't do that. You can't get away, you can't fake that. So and of course that's analyzed by pros. Please just give me 1 second here. I've got this, okay, never mind. So I'm very proud of that, and they've got a great reputation. And so that's just something that I think is really good. So I've told you a little bit about my history. I'm now predominantly just trading full-time. I'm not doing too many of the property things. Let me just do this quickly. Sorry, I've ironically got a fund client calling me right now. Okay, so this is just the idea that we'll just introduce you to that. So why trade the markets? There's a series of slides here on compounding, and now if I did see you in person, that's fantastic. As a general rule, I don't present to live. I don't attend these events. This is not what I spend most of my time doing, but I do like it because I get out and about and I kind of see other people in the industry, and it's a small pond. It's a very small pond, so it's nice to do that. And I will be there in November. I have promised Rakesh that I will be there, and so if you do want to attend and meet everyone, that would be fantastic. Come over and just say hello, whichever desk we're sitting at, and just come over and say hello. But for the most part, I'll just be at my desk at home. So compounding is worthwhile talking about, excuse me, because we can use it to our benefit. So although a lot of people talk about it, nobody really uses it properly. And we all understand it in terms of credit card debt, but it is quite impressive if we are able to achieve growth on it on a monthly basis. We can use it in our favor. And the best example that I can think of for that is, honestly, this is what I do when I'm when I'm trading for clients, is that I anticipate that if I can just hit a certain type of return every week, that I will generate an additional return by the end of the month simply through compounding. And an example of that would be if I can kind of generate 5% in terms of trading as I go through week 1 through to week 4 in the month. By the end of the month, it could be as much as 7%. And just through compounding. And so that extra percentage is the same amount of work. There's no extra work, but it has made a significant difference to the returns on the account. And so I use compounding as part of that. It also takes the stress of trying to hit a particular target per week, meaning that if I just do 0.25% a day, it'll compound to 5% a month, which is incredible. And so it takes the pressure of having to do a certain amount per day, but rather per week. And so that's kind of what I do. So just the whole idea here is saying that, look, if we're not using it properly, if we're not paying attention to it, compounding can kill us in terms of the debts we build up in life, but we can actually use it in our favor as a trader. Is everyone with me so far? Is everyone alive? Nobody's trapped under a rock or anything? Okay, so that was just to introduce that concept. Now, in terms of how much is feasible to expect to return, this is the other thing I wanted to say here, because trading is very much a learnable skill. There's a certain amount of stuff that you have to get through in the beginning because you have to determine where you're bringing your baggage into the game and where you're not. But trading is ultimately a simple process once you get rid of your headspace, the stuff that's going on in your head. So a certain amount of practice and familiarity with the strategies does start to make it a lot easier, relatively speaking. So when I'm showing the trades that I do to the fund managers, it looks so easy to them. When they see what I've showed them, I go, well, that's the trade I took. Well, they go, well, that's obvious. But if they were to try and do it on their own, they have all kinds of fears and doubts and funny things that get in their heads, like what's Draghi going to say, what's Trump going to do, and that doesn't really help if we're technically analytical traders. So this is something to keep in mind, but it's feasible to anticipate to do about 4% a month. Okay, so that is something that we believe that traders who are looking for high quality trade setups should comfortably be able to achieve, and sometimes even more. A lot of people are very scared of saying how much you can do, but the point here is to teach a man how to fish, okay, as opposed to give a person a fish. We're trying to, it's a very much learnable skill, but it is also about not trying to complicate it and not trying to make it secretive and not trying to confuse people with it. So, we're kind of looking for 2 to 5 trades a week if they exist. If they're not there, we don't trade. If the trades are there, we take them, because really good trade setups are worthwhile taking. It's money on the table. And so I wanted to give you a sense of that. So the first thing we do is we want to really be selective about the charts that we trade. We're looking for what we refer to as optimal price action, meaning a very clear price direction, because the market is either going to be trending or not trending, or trending up, trending down, or not trending. And so we need to be able to differentiate that. Also, people need to understand, and new traders need to understand the difference between a strategy and technical analysis. Technical analysis is just studying what the conditions in the chart are doing. It's a study of historic prices, mainly so that we can determine key levels. We need to look at history data so that we can determine which price levels are significant, because they are ultimately the barriers, the walls between where the trades are going to be taking place. Then we have to be aware of the indicators, types of indicators and oscillators that are out there in chart patterns. Those are just, they just tell you roughly what's going on in the charts. The trading strategy itself is very much a pattern, a definition of a type of pattern that you're going to trade, a high probability pattern, that when this type of pattern occurs in a chart, that it tends to unfold a certain way. And if it looks like this, it's a very strong version of that pattern. And if it looks like this, it's a weak version, meaning it could be hit and miss. And so really we learn to identify the stronger setups from the weaker setups, and then we trade those. And that can take a little bit of discipline, because initially we're excited about just trading in general. But once we get to the point where we realize, holy cow, I'm really good at picking these types of trades, then it becomes about actually starting to just find them. So you stray less and less as you get more, as you mature as a trader. You're kind of like a kid who just wants to eat sweets before bedtime, and your parents are trying to feed you vegetables, and you don't really get it. So now as you get older, you still want the sweets, but at least you understand why your parents give you the vegetables. So it's a lot more like that. Anyway, so every strategy should always be based on evidence. You're always collecting evidence to take a trade that it's much more likely to go in your favor than go against you. So that's the edge. And it should always come with a very specific excuse me, entry. Excuse me. I got one of those dry throat things. Okay. It should always come with a very specific entry and a very specific exit, a series of actual where your stop loss should be placed, and how to manage the trades to squeeze as much profit out of them as possible. And then we talk about focusing on flawless execution. So flawless execution is actually just a state of mind. It's a decision to behave a certain way. It's kind of like somebody gives you a diet, and it's making a decision to stick to the diet until it's not an effort anymore, until the diet becomes the normal way of just healthy eating. That's really what flawless execution is. So technical analysis won't make you money just by analyzing the charts, but the strategy itself, once you've analyzed the chart, it will help identify where the setups are, or the strength of those setups. So a lot of people struggle to do this. I mean, first of all, honestly, trading is much more about mastering fewer strategies and just mastering them and understanding them, and less about changing time frames, changing strategies, new shiny indicators, all kinds of things. And certainly this is the way that trading has been done for the last 100 years. So the only three areas of technical factors that we do need to focus on is one, who's in charge of the market we're looking at the specific chart, the bulls or the bears. Is price trending? If it's trending, then we're going to look for an opportunity to join the trend. If it's not trending, we're going to walk away. We also want to use traditional indicators as leading indicators to predict price movement. So usually indicators are lagging because they're derived from price action. But we can read them in a different manner to help identify where trade setups are going to be. So we use them in a different way. This, to my knowledge, certainly for a while, this has been unique to Trade with Precision. Technical factors are really nothing more than building blocks. We're looking to build a case, to build evidence, and so we obviously want to combine as much evidence to support our idea, or to support that the pattern we're looking at is a good setup. So each technical factor is a unique building block. So this is looking at price action, support resistance, Fibonacci, moving averages, for example. And each building block has unique characteristics. So what does this mean? It means understanding each particular element, understanding price action, and understanding how to identify true support resistance, understanding how to read price action, understanding how, what moving averages, what the purpose of them are, what the purpose of horizontal support resistance levels are, and just understanding how to then combine all of them. So when we put these specific blocks together in a certain way, obviously that's when the magic happens. We start to build up a case. So for someone who's been trading for years, their ability to read price action, it's like reading body language. If that's all you do is study people's body language, you're going to get to a point where you don't even realize how much you know. You'll just read someone and you'll pick up everything. For a beginner, it's hard to look at all the different amounts of information that's coming in. So for traders, so what we have to do is we have to provide beginner traders with a long list of things that they need to do to check, because we have to teach them all the different things that they have to take in. But over time, it becomes muscle memory and unconscious. So just showing you how we can build up that case. So the 5 technical factors for the trend flow strategy are: we need 1, optimal chart structure. This is the price action itself. So everything should start with price action. So no matter what indicators are on the chart, we should be looking at price action. And anyone who tells you otherwise is selling you something. 2, the moving average fan. Okay, so this is using the moving average geometry to help frame the price action. It does 2 things. It confirms that the trend is healthy and established. And 2, it identifies areas where price action should provide us with opportunities to join the trend. Then in this area, we call the dynamic buy and sell zone. So I'll go through that in a bit more detail. Then we look at price action itself specifically in terms of what is it signaling to us in terms of our opportunity to join the trend, and how is it behaving within the context of the trend. And then we look at support and resistance. Support and resistance is incredibly powerful for the following reasons. Effectively, support and resistance levels from the daily, weekly, and monthly timeframes help tell us where the meat on the bone is, so to speak, where we can trade from one level to another level. It also tells us where we need to make sure that we're out of the trades by a certain point, or we take profit by a certain point, and also we can use them for stop loss protection. So we can use them to, it's just incredibly powerful. If you had nothing else to trade with other than price action and support and resistance, you could still make money. So the rest is just extra stuff that traders need to help either strengthen a trading decision or not. So technical factor number 1, optimal chart structure. Focus on charts with a clear trend. Trend analysis is the single most important technical factor, okay, for this. Highs and lows that give us an indication of who's controlled the market, and too many unsuccessful traders regard trend analysis as too basic or easy. And every program you ever go to, the very first thing they teach you is this is an uptrend, higher lows and higher highs, and a downtrend is lower highs and lower lows. It's the first thing they teach you, but nobody ever applies it. And that is magic for me, because it's the one thing that people just don't do. And I know lots of people who've been working in the city for years who don't actually know how to read price action properly. So the point of it is that if we arrive on a chart and it is producing higher lows and higher highs currently, then we should only be looking to buy. Okay, depending on where the support resistance levels are, we should only be looking to buy because the trend is up. If we arrive on a chart and it's producing lower highs and lower lows, then we should only be looking to sell. That's it. There's nothing else. If we're buying in the situation, then the whole point here, ladies and gentlemen, is to earn a consistent living. So I don't know what I'll be trading in 6 months' time, but I know that it will be whatever is trending. If that's the euro, or if that's cocoa, or if that's the S&P to the downside, that is what I'll be trading. But it has to be trending. So that's the beauty of it, is I don't really care what the fundamental reasons are a year or 2 years from now. I just care what's trending. And it takes a lot of the strain and the stress and emotional pressure out of doing it. But to go and try to short the S&P today while it's bullish on multiple timeframes is suicide, because there's just no supporting evidence for it in the price action. And so that's really what we need to do. Is a lot of people, that's a great example of that, because we will see when the market goes into a downtrend and then we can start selling it, but it isn't that way now. And it won't cost us anything really to do that, to just be other than patience. And everyone's preparing to do it, and actually we should be buying. So this is just highlighting that we need to be trading today what's trending today, and then just trade it in the direction it's going in. And we need to be doing that a month from now and 2 months from now and always. And that's how we earn a consistent living. We find a trend, we join it, we take some profit. We find another trend, we join it, we take some profit. And so that's really our obligation. All right, if we arrive on a chart, and this chart doesn't get enough appreciation, in my opinion, is if we arrive on a chart and it's mixing up its highs and lows and it's inconsistent, then it is either consolidating or ranging. And it is not producing, it is not a money-making opportunity. It's a time waster, and it's going to cost you. It's just going to cost you in terms of emotional, in terms of your emotional equity, because it's going to hurt, because you're going to be trading something that has no clear direction of where it's going, and it's not going to follow any rules. And also remember that pros do like to trade trending markets. So that's very important. So what we do is we talk about trading any market, any time frame. We refer to trading any liquid market. We don't want to trade something that gaps. I mean, that's because that introduces risk and it increases the spreads or the fees that we pay when we get in. It's not practical for us to do that. All right, and we want to avoid charts with long tails. This is just crazy. This is, again, these are bad relationships, and every trade is in its own way a type of relationship that you have. What we're looking for is something like this. Doesn't really matter the time frame, doesn't really matter what the instrument is. If it's liquid and it looks like this, we can trade it, so we can make money. All right. And so this is very much an emotional choice many people have to make. Everybody that I'm talking to now, I'm presenting to now, can see that this chart is clearly trending. You can see it with your eyes. Your brain is telling you that it's definitely a better quality chart. But then there's these emotions that come in saying, well, but I don't know, maybe the trend's going to change soon, or blah, 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 blah. And then actually what happens is our emotions just get in the way. And so this is really when we talk about how trading in itself can be very simple from a technical, cold-hearted, precise perspective, but most people just bring their baggage in. And when I say most people, I should say all people. Just the quantity and type of baggage varies, but everybody brings it in. So don't ever think that you can't learn how to do this. You can. And I've mentored enough people to know that it can be done. So technical factor number 2. So this is just to recap. This is the kind of price action we're looking at. And I always like finding this on the daily, because if I can find this on the daily time frame, then it's tradable on the lower time frames as well. Then we want the moving average fan. So this is a 250, 20, and 10 simple moving averages. You can use exponential, doesn't matter, but they're there and we can use them, and we really just use them to frame price action. They tell us that the trend is established and that it's stable. Okay, so the price action is actually telling us that as well, but the moving averages are reinforcing that. So that's important for us. It tells us, it smooths, first of all, moving averages smooth out the short-term fluctuations in price. They highlight the trend, and we can use simple or exponential moving averages. We do not use them for support or resistance. We do not use them for entering trades. We don't look for price to touch a moving average, and we don't use moving average crossovers. We don't do this because it's not 95 to 100% reliable for us. We need tools that we can count on all the time, and not something that randomly seems to show something else. It's not enough for us, and that's a choice. And the way that we develop, or the way that Nick has developed the program, it works more than enough. So identifying the moving average fan, obviously what we want is, if price is trending upwards, we want all the moving averages rising as well. In a downtrend, we'd want them all declining as well. and at a similar angle. So if they're running largely parallel to each other, that is an incredibly strong trend. It's beautiful. If there's a nice space between them, just almost like train tracks, just going in the same direction. And if they're forming a fanning pattern as well, that just tells us that the trend is nice and healthy and happy. And if we do moving average crossovers, that's just too delayed. We want to be able to know, I've got a trade set up now, is it a good setup right now? Okay, and know that all the evidence is supporting it to take the trade. The third technical factor also uses moving averages, and it helps us time our trade entries. So now what's happening is we have identified a trend in our price action, the moving averages are supporting it, we are now looking for an opportunity to join the trend. So price will move in these waves in the trend, extension, retracement, breathing in, breathing out, breathing in, breathing out. And each wave offers us an opportunity to join the trend as price pulls back to that point of equilibrium. So to identify where this equilibrium zone is, we use these moving averages. Okay, we use the 10 and 20 moving averages, the space in and around the 10 and 20 moving averages. This is a point of equilibrium. It's impossible to find a steady, healthy, sustainable trend that does not interact with the 10 and 20 moving averages. They don't exist. You can't have one without the other. Okay, it's like night and day. They're always together. So the colored zone around the 10, I know that sounds like a contradiction because you never get night and day together. What I mean is that one always follows the other. They're just always two sides of the same coin is what I guess I was trying to say there. So the colored zone around the 10 and 20 period moving average is considered to be the buy zone in an uptrend. Okay, is everyone there? I'm just checking. You guys are very quiet. So you either my dulcet tones are putting you to sleep, a nice afternoon nap, or I don't know. Just checking that. There we go. Okay, everyone's alive. Okay, good.
Everyone's still here. Yeah, we're hanging on every word. That's all. We're just taking it.
Okay, good. Good. So, and the sell zone. So we've got the sell zone. If you go do this, put this on any chart that's got a nice trend, and you'll see this interaction with the sell zone. So you can't, this is self-evident. That's a great way of putting it. It's self-evident. It shows that it works because you can see it. And so the logic behind the trend flow, this is why I like it so much, is because it's so simple to me. It's basically saying, I can see that you have this habit of interacting off this sell zone. And as long as I'm not near a support resistance level where price might change direction, which is what happens at those key levels, it's not crazy for me to assume that the next time you come back into the sell zone that I have an opportunity to join you for the next move. So basically we're saying, look, you're doing this type of thing as a type of behavior, and all I want to do is see you do it one or two more times. So it's actually very sensible from that perspective. So the next technical factor, number 4, good, thank you very much. Number 4 is candles. So again, having done Steve Nissen's candlesticks, and I love them, and Al Brooks' price action as well. These are all different things out there. There are hundreds of candlestick pattern names. Candles alone are not a complete trading strategy. Think of a candlestick pattern as just one of the many technical factors that's out there. So the first thing is that this industry is fantastic because, to be honest, there are people who are very good and just specialize on the MACD or specialize on Bollinger Bands or whatever, and they do that. And they can write a book on it, they can write a thesis on it, they can make an indicator, they can make money off that. And there's nothing wrong with that because as long as they're adding value to that particular instrument, there's someone who's interested in learning about it, there's a market for them. So that in itself is not a problem. And honestly, that I keep saying the word honestly, but what I mean is that knowledge is cumulative. It's not really wasted, but it can be distracting because it can often undermine the most important things such as price action itself. However, at the same time, there's always a lot of people who have worked out that all they have to do is produce all these shiny bells and then keep selling them to people and go, okay, I've got a new indicator for you. That'll be $90. Okay, here's another new indicator. Okay, I've improved this one, blah, blah, blah. So a lot of people, it's very easy to produce gadgets and things to you can sell people. So it's a massive market for that. And just be aware of that. When in actual fact, the way that these strategies work, you can trade on any platform, literally with any charts. You can trade off MetaTrader 4, off EKG, you could trade off eSignal, off TradeStation, any platform you like as well, through any broker. And so you can use the strategies. It's literally universal. And that to me is testament to how solid it works. So the candles alone are not a complete trading strategy. Think of a candle pattern as just one of the technical factors of a trading strategy. Learning lots of candle patterns can take focus away from what's really important, who's in charge, the bulls or the bears. Thank you very much. Thank you very much. There's just a question here. I want to have a look at this one. As markets only trend 27% of the time and we need to sleep, how can you use alerts to avoid living on the computer? All right. So from experience, once we find a trending chart that's trending on the daily or say the 4-hourly, to a degree, we are going to have to check it every few hours. So let's say I'm looking at a chart every 4 hours. I'm waiting for an entry on the 4-hourly time frame. So I'm probably going to check it every 2 hours because I'm just waiting to see if the setup. And so we're going to talk through the strategy in a moment, and then I'm waiting to see if that setup occurs. So this question is actually going to get a better answer in the next 10 minutes. But I'm waiting for that setup to effectively occur for me. And yes, it's possible that it could occur at 4 in the morning or whatever. And so really what actually happens here is that we really are only able to trade in the period of time that our lifestyle allows us to do that. So we are responsible. We do have to sleep. We do have to eat. We do have to exercise. We have to do all these different things. And some people have kids or whatever and a job. They might only be able to trade during lunch or in the morning or in the evening. So what they do is there are multiple markets trending. What they're looking to do, it's a very good question because this is the dilemma that plagues everyone, is during that period where you're able to scan the markets, you'll go to your watch list, which is your short list of charts that are trending, which you might have done on the weekend, or you might just, it gets faster the more you practice doing it. But once you go to your watch list, you then go and look and see if there's a setup occurring within that window that you're sitting in front of it, okay? And if it doesn't occur then, you're going to have to let that go, but that's because you'll never get all the trades that are out there. But all you do need to do is get a certain amount to make your anywhere from 2% to maybe you have a bumper month. Maybe you hit 5 trades in that month and each one goes 3 to 1 and it compounds and you hit 20%. It's not impossible, but what matters is that the quality of the setup is high quality. That's what matters. And if you do that, the money will come, kind of thing. That's, you've got to focus on doing that. So, but I was more interested in the fact that you said the markets trend 27% of the time, because that seems like an incredibly precise amount, and we have different markets and they do different things. I just thought that was it's interesting, but I don't subscribe to that. I just subscribe that there is a trending market somewhere, and I'm going to go trade it, which means that at any given time there's a trending market. Okay, so technically I could say that I'm trading trending markets 100% of the time, but that isn't true because this week I haven't taken a trade yet. But last week I took a whole lot, and it's mainly because I just haven't had the time to go down to the lower time frames and see if there's anything. But some of the dailies aren't looking that great. Okay, so sorry. For me to carry on, what I wanted to proceed to the next point here is to... Okay, so here we go. So you can take every single type of candlestick and you can put it into one of 3 categories. It's either going to be bullish price action, all right, such as these ones on the top category here, or it's going to be bearish, or it's going to be indecisive. It could even be bullish indecisive or bearish indecisive. But the point is we don't have to overthink it. And it is a fact. Every single type of price candlestick can go into one of these 3 categories. Just like every type of chart can either be trending, uptrending, downtrending, or no trend. So it's more about just stepping back and going, okay, what's the story here? And instead of really trying to evaluate something, just going, you know what, it's not trending, I'm just going to move on. And that takes a little bit of letting go of things when you just realize, actually, I can't affect the market. The analogy, there's so many analogies that work, but the analogy I like the most is the idea of learning how to surf in the ocean. So you would go to a beach, you would immediately determine what the weather conditions are like. Is the ocean too flat? Is it too stormy? Presumably you can swim, okay, and presumably the water is safe to be in. But then the next step is finding the set of waves. And we know that they come in sets, so then you identify the set. You time it so that you can paddle with it and join it. Sometimes you're going to miss the timing, you'll be off, you won't paddle fast enough, or you're ahead of the wave, that kind of thing can happen. Once you get on it, you ride it until it dies out or until you decide you're done with it. If you get on the wave and it dies out immediately, you don't get pissed off with the wave and go, oh, you let me down, you betrayed me, blah, blah. You don't do that. You just go back and get the next wave. And you do that for that period of time that the waves are there, the conditions are right, and then you have the energy to do it without, getting too tired and endangering yourself. Trading is the same. We're going to go find the conditions, find the set, identify the set of waves, and then we're going to time it so we join it. And we're not going to get emotionally invested in why the market's doing what it's doing. We don't think about why the waves are forming. We don't do that. We don't really care about it. And we think because the markets are man-made, that man has an influence on them. There's so many people involved, thousands and millions of different things going on. There's so many cogs. Sometimes one move might be attributed to one incident. But generally speaking, on a day-to-day basis, that isn't the case. There's just so many participants in that market. And this is another thing. Everyone's talking about what's going to happen with the currencies because of this political thing. And I'm going, the currency markets are predominantly businesses transferring money, people ordering stuff off Amazon, tourists exchanging money, banks, companies paying suppliers, ordering stock, people, banks, companies transferring money across to each other. There's an entire underlying market. And some little dude who runs a shop in Spain that maybe exports a product out to America is probably shaking his head at Trump, but he's not going to change his business model based off what comes out the news one day unless he feels that it's going to be a long-term change and he has to adapt to it. So we really overthink what the news does on an ongoing basis. And that's why we can't match it to what we see in the markets, because it isn't matched to the markets. Like I said, Draghi can say something and upset the market, that's fine. But to change the trend and stuff, it's not that weak. The markets are not that weak, and they exist for other reasons other than the pandering of politicians. So, I'm sorry, you got me rambling there, just keeping an eye on the time. So we've got, let's call it 16, okay, it just switched to 15 minutes. All right, and so basically we want to categorize price action into that. The next thing is trade with precision doesn't really go with sloping trend lines. It isn't because, again, although we can often see price interact with those trend lines, it's not 95 to 100% reliable. So forget about it. So we just take it away. It can be very subjective, and price action can be slightly different on different brokers' platforms, and then the trend line, there's a trend line on one person's platform that somebody else can't see. Forget about it. Just get rid of it. We use support and resistance levels. Now, a true support and true resistance level must have a minimum of 2 touches in that point in space by price action before it can be acknowledged as a true support resistance level. Otherwise, it's just a random point in space. So it must have a minimum of those 2 touches. And so the same thing again, a level of support again is at least 2 touches. And obviously, the more touches, the more we can acknowledge that that level must be significant. So going through this from the top again, 6-step trend flow strategy, looking for a chart with optimal chart structure. Ensure that the chart is displaying the moving average fan, the 50, the 200, the 50, the 20, and the 10. Simple or exponential. Wait for price to interact with that dynamic buy and sell zone. Look for a bullish or bearish candle, which is our signal that the bulls have returned to resume the trend, or the bears have returned to resume the downtrend. Ensure that there's no support or resistance in the way of our target. So we're talking horizontal levels. That's where price changes direction. And so what we want to do is make sure that, as I said before, we can use those for different things, but they do largely determine how much profit there is for us to take. And I would add news, economic calendar news into this, meaning the economic calendar tells me that there is a US dollar medium or high impact news event at this time, and I'm looking to take a euro dollar trade. So I have to determine if I'm going to be able to close my trade before that news announcement comes out. I don't really care what it is. It's medium or high impact. I don't really care what it is. I just got to make sure that, because it could impact the market in my favor or against me, but I don't actually know. So I lose my edge. So therefore, I want this trend to keep going without anything interfering with it. And the only 2 things that can interfere with it, 3 things. One would be a support resistance level that I've missed, that I haven't seen, an economic event news announcement that I haven't seen, or a flash crash, something like a black swan event. Okay, so that's it. Ensure that the chart is displaying the moving average fan so that we can determine this. Okay, and so trend flow. Let's go through some of these examples. I wanted to have a look at the markets, but I have to keep an eye on the time. Yes, I can happily show you steps 1 and 2 again. Let me just go through those steps again. Blah, 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 blah. Step 1, looking for that optimal chart structure, price action, that beautiful chart structure. I'll show you very quickly on silver what that looks like. Actually, let me just go across to that. So let's go across. Okay, so let's say we went across to, only because silver had a really beautiful one and I missed it. It was on the 4-hour. So let's just go across and have a look at these, just very simply. And just see. So I've got the weekly and daily, but that doesn't really matter. Hopefully you can see my chart in front of me now. But if I just go down to, say, the 4-hourly and let it load up. This was really nice, but this doesn't happen. This is very unusual. I mean, as in, this perfect, picture-perfect trend does not occur all the time, but when it's there, you would milk that. Okay, and we had this kind of thing on, we had it on soy, we had it on some of the commodities as well, so we had it on other commodities, and we can also get it on currencies. So my point of that was just to say that it does exist, and sometimes it's on a lower time frame, sometimes it's on a higher time frame. Sometimes we're very lucky, like dollar CAD. 6 months ago, dollar CAD was just trending beautifully, but on every time frame. So we want to look for that. We want the chart to be displaying the moving average fan, the 200, the 50, the 20, and the 10. And we want to wait for price to pull back into that dynamic buy and sell zone. Then we're looking for a small bullish or bearish candle, which is our signal candle, to join the trend. Okay, and then also we just want to make sure that there's no support or resistance in the way of our targets, so we can hit our target. We're looking for 1-to-1s, 2-to-1s, or 3-to-1s, ideally risk-reward setups. If anyone cares, I risk maximum 0.5% per trade on all of my trades, but that's my emotional safety zone, because if I have a 50 grand hit, that still hurts me, and that would be 1% of an account. So that still hurts. Whereas 25 grand, it's hard to explain, but your temperature adjusts slowly over time with how much money you kind of associate with it. So 0.5% is nothing for me, because I'm always looking for 2-to-1s or 3-to-1s, and sometimes 1.5-to-1s. So it doesn't matter, but I know that I can recover, and also I have a 5% drawdown mandate. And so that means that I don't want to get to that. It's possible, I could have 4 or 5 losing trades in a row straight out the gates with a new client. It could happen statistically. It hasn't happened in a couple of years, but it could happen. And I don't want to suddenly have to stress about that. So basically, by 0.5% per trade, I'd have to have 10 losing trades in a row to get into that situation, and that doesn't happen. So I'm actually managing my emotions. That's the irony. Ensuring the chart is displaying a moving average fan, I feel like we're repeating that. I think you've got the gist of this. Let's go look at these on the charts. So look at this price action structure here. That looks pretty nice. Very, very nice here. It's broken through a level of resistance. That looks really nice. It's pulled back into a level of support, and you have a bullish candle in the buy zone. You've got your 50, 20, and 10 moving averages fanning out. They're running parallel to each other. They look really good. This is a sustainable trend. Okay, looks really good. It's a very nice setup. The stop loss is, so where would we place the stop loss? Well, in this case, normally we would place the stop loss below the candle in question, our entry candle, which is supposed to be the turning point. So we're looking for the turning point where price retraces and then begins the new extension. We're looking for that. And so our stop loss would normally be below that turning point, because if price goes through the stop loss, either before triggering us into the trade or after, it means we didn't find the turning point. Again, it's practical. So, but in this case, what's beautiful about this is that this is an extra bonus, is that this level of support and resistance becomes a stop loss protection. Our stop loss would actually be under this level anyway, but it's also protected by stop loss. So that particular setup, that's a no-brainer. And that one, it is the same chart, just ultimately went on. And that was, I'm normally banking at 1.5-to-1 or 2-to-1 or 3-to-1. I don't go for more than that, because I can't tell you, honestly, which trade is going to be a 5-to-1 or which one's going to be a 10-to-1. Nobody can, I don't think anyone can predict it. We can see where the next support resistance level is, but sometimes the trend just goes and you can't predict that. So we put the same amount of money on each trade, because we know that ideally, if they're good trade setups, most of them, if not all of them, should go at least 1-to-1, and some of them will go 3-to-1, and some will go further. We just don't know which ones. So we actually have to treat each trade equally. And again, I think if anyone tells you that they can predict which one's going to go 10-to-1, I don't know. Of all the books and everything I've ever discovered, I've never seen anyone who claimed that, any pro anyway. So there's another question here, which is, yes, you would, sorry, there's a couple of good questions here. Do you have all 6 of these steps on one chart? Yes, you would have all 6 of these on one chart. Yes, you would. That's what you want in a chart, because that describes a steady trend and a good setup. Does the candle have to be green and bullish to take a buy trade? And will you take the red candle with a long tail down too? So in other words, that's a very good question. Technically speaking, a red candle with a tail, which is a rejection, which is a bullish candle, not this one here, but let's see if we can find, if that was a red candle, technically that would be bullish, that would qualify, like this one here, sort of. Interestingly enough, that does qualify. My personal preference is a green candle. So it's a fine-tooth comb, but I do kind of personally prefer that. So, yep. Let's just go through some of these as well. Here's a setup here. You can see that the angle of the momentum of price is really good here, and then it's sort of slowing down a bit here. Here's our setup there, and it actually ends up being stopped out by the outside candle. Now, I actually think price went up first and then went down. I don't think it was a losing trade. I don't think that was the case, but statistically, this is the type of, all traders are okay with having losses. We accept, we're all adults, we're all grown-ups, we know we're going to have losing trades. We're not going to get precious about that. But what's important to us is to determine, was that a loss that I could have avoided, or was it just a statistical loss? And for me, almost all of my losses are statistical losses, where I just get stopped out by the next candle. And often what happens is I could get stopped out by a candle and then get another setup a few candles later, and then that takes. And in reference to one of the questions earlier about it being a setup during the night when you're unable to take it, that happens too. Sometimes I'll see a setup at 4 in the afternoon, it'll trigger me out by 8 o'clock or 9 o'clock, and the next setup happens at 4 in the morning, and I'm waiting for the next setup and I miss it. That does happen, but usually I've got about 6 or 7 trades on the go at the same time, so cumulatively I'm just going forwards all the time. I'm just crawling forwards. Some are, you have your losses statistically, and then you have a couple of winners, and you just keep going forwards. And you should, because the setups that I go for are good quality setups. Do I use a scanner? This is another really good question. I use a scanner. I built a scanner into using the language inside eSignal. So very quickly, because I know, by the way, we have like 4 minutes, give or take. So I want to be very careful with this. But I have, just to show you, so I have got a scanner one here, but I don't actually use it. But I just wanted to show you that I did actually do it. All it does is it directs me to a chart, and then I have to determine if that's something that I want. So then I might go, so this would be the trend flow long, and then it'll provide me with some setup. So let's go see, there we go. So it's come up, it's done a scan, and these are the ones it's come up with. And that's too choppy and gappy for me, so I'm going to pass on that one. The same thing, too choppy and gappy. Eventually I'll find something that's really, really nice. That one's a bit better. And it's interesting because you can tweak it and you can make it better. Sometimes it comes up with setups and I'm going, how did that tick all the boxes? Anyway, look at that. Whereas this structure here, it is gappy. It looks really good on the weekly. This is great to trade on the weekly, but on the daily it's crazy. So I just wanted to show you that I had done it, but I don't actually use it, I promise. So this is a level of support, a resistance which becomes support, and there's a nice same thing. This is again is not that perfectly steady price action, but it's definitely a nice uptrend, and it's broken through this level and coming back and set up like this. It looks really good, and subsequently goes on. And again, it had that nice stop loss protection. That was really, really, really good. Same thing here. We've got that really good interaction with price and looking for that setup, and it was quite a big run. So I'm just running through these because I know that we're close on time. This price action here looks very, very good, by the way. It doesn't look overextended. It looks very, very healthy. This is a trade setup that I would take, but interestingly enough, it triggers you in and stops it out. So this to me is a statistical losing trade. But the quality of I keep looking at it and going, that is definitely a valid trade. It's absolutely a valid trade. There's nothing wrong with this setup. So there's nothing in here that is a clue that you're going to get stopped out. So it's just a statistical loss. And in fact, this is a news announcement. That's why there's this reaction, because it triggered, it was going to carry on with the trend, and then a news announcement came and just spiked it out. So that's all it is. Okay, this one as well, this trend is not picture perfect, but the principal structure, the infrastructure of price action is there. So, and it does ultimately then really starts the trend. So I just want to keep an eye on the time. Really, really nice price action structure, just showing you there are some winners and losers there, and just keeping an eye on the clock. So you've got some questions, and I want to answer that in the next 2 minutes. So just let me finish up and then I'll go to the question section. So these are just things that I have noticed when I talk to a crowd of people, and then people come over and tell me what they're doing and how they're struggling. These are things that I can collectively say are not a good thing long term. This doesn't lead to sustainable earnings from trading. Trading very low time frames, 1 minute, it's too volatile, it's too fast. It goes from trending to ranging to trending, it's all over the place, and it's too unpredictable. And the fees, the spreads, and everything are too crazy. Then no awareness of the higher time frame or lack of trend. So someone will trade one instrument, the euro, whether it's trending or ranging, and they'll trade the 1 minute, and it's like throwing someone to the lions. Trading only one instrument, trading only the DAX, trading only the FTSE, trading only the euro dollar. It's crazy. If you're doing all these things here, I guess my point is if you're still making money in 6 months' time, come talk to me, I'll be amazed. Generally, most people will just get the crap beaten out of them by doing this. Changing the risk management rules, so there's no stop loss. They're using a MACD crossover, and then they're changing the amount they risk, or they're changing a amount per pip. This is not sustainable. And then trading without a stop loss, which is the single reason for all greater stop losses. All it takes is one trade without a stop loss to lose everything in your account. You could build up an account over 20 years and lose it all without a stop loss. So I don't think that can't happen. So I'm going to have a look at your questions. What I want you to do, though, is if you want to find out a bit more about this, please contact Rakesh at tradewithprecision.com and book a one-to-one with him. So he'll phone you and answer any questions you have. And he's an awesome guy. Everybody at Trade with Precision are the best people I've ever met. They really are. They're just such great people. So if you have any questions or you want to find out a bit more, send an email to Rakesh at tradewithprecision.com and book a one-to-one with him. So I'm going to do your questions now, and I'm going to clock out in about 1 minute and 30 seconds here. So let's just go through these questions quickly. Do I use multiple timeframes? Yes, I do. Absolutely, completely crucial. Must trade in line with the high timeframes. Do I personally offer mentoring a trade with precision? Yes, I do. I have my hands full at the moment with 4 mentees, but obviously, eventually they finish up their mentoring and they don't. In fact, the funny thing is now they're all about halfway through their mentoring and they don't need me anymore. So meaning they'll contact me every couple of months and say I have a couple of questions, because they're all pretty consistent by now. So the short answer is yes. Do I use a scanner? You've seen that one. Do you want the majority of the candle in the buy sell zone or just the tail? Actually, that's a very good question. It just has to be approximately around that area. It doesn't matter. The setup, actually the price section itself will tell you if it's a good setup or not. How do I create the shaded areas? That was actually done. That was done in Photoshop or whatever. So don't worry about that. But there are in some programs, some packages, they do have a tool that will shade between the moving averages. But I don't use that. Can I go through the 6 steps again or summarize? Basically, you need that price section, that optimal price section, the moving averages. You'll need to keep an eye on support resistance levels and that buy zone and sell zone. Those are the key things. Okay. Thought there would be a summary slide with those 6 steps. No, I'm sorry, we covered them a couple of times. Can I use all moving averages on the daily charts only? You can use these moving averages on every time frame. So they work on every time frame. So like the 1 hour, 4 hour, 8 hour daily. I know lots of more experienced traders are looking at 15 minutes and 30 minutes. It's better for beginners to master stuff on the 1 hour, 4 hour, and daily. They can still make 4 to 10% a month, or they can still make a really good return per month just by trading the daily or 4 hour timeframes. Then once they've mastered everything and their brains can cope with the amount of data coming in, they can go down to a lower time frame. And do all our timeframes have to be trending in the same direction? We want at least 3 higher timeframes in the same direction. What's my target? Interesting enough, my target is just really good trade setups, just high quality trade setups, just taking those, and if they're not there, I don't trade. But generally, from experience, I anticipate about 4% per month. Simon, I'm going to ask you to jump in if you're there and come back in and just see how everyone is doing and make sure that you know that I'm ready to hand back the reins.
Brilliant. Brilliant, Adam. Thank you very much. You are a professional. If ever the phrase "leave them wanting more" was more appropriate, I think, because I think you are leaving a lot of people wanting more, judging by the amount of questions that you've generated. So thank you on everybody's behalf. Thank you for a wonderful.
No, thank you for inviting me. It was it's a pleasure to be here. Thank you.
It's some great stuff you've got there, and very professionally delivered as well. So our thanks for that. Okay, I will take the presenter role back. The only thing I might add is that when you log out, you just exit the webinar instead of ending the webinar, because you have.
My menu only has one option, which is my menu only says I can end the webinar. That's all I've got. I'm just kidding, of course.
Thank you very much.
I'm just kidding.
It's happened before.
I know. I think I've done it before. No, I'm just going to leave the webinar nice and peaceful, no protesting. You won't have any trouble for me.
Wonderful. Adam, thanks so much. We'll follow up with all these links, and people can contact Rakesh to get in touch with the community. Thanks very much again, and I'll take the presenter role back.
Thank you. Thank you. Thanks. Thank you, everyone. Have a good day. Bye.